Good morning, good evening, good afternoon, wherever you are in the world. This is John with Tommy's Top Picks here to bring you your weekly flesh and blood market update. Let's jump in. It's looking pretty brutal out there. Wow. Markets are down across a lot of products and just generally as well. I'm not sure what is causing this. Is this post event? There's the Hartford, Connecticut event decline? Maybe. Um, yeah, it's a weird one. If you know what could have dropped the market so fast across so many products, please let me know. I'm curious if you have any thoughts on that. But yeah, let's jump in and we'll take a look at a few of the charts. First and foremost, WTR first edition box is down 13.68%. Now, this is somewhat of an anomaly and probably more on me than the actual data itself. The list price, I'll just show you here. The list price here, which is what I usually draw upon, is 29.50, which is what we've had it listed at, as you can see, for a while, 2 weeks at least. But if you scroll down, and this, I just happened to scroll and see this, there is one listed for 25.95 here. 100% rating, only 463 sales. Maybe that's why it's not the top one, the I don't know, banner page one, whatever they call the top, the one that shows up at the top. I don't know how long this has been sitting here, but it is for sale. So it's a market price point that I can't ignore. The downside is I may have been ignoring it for the past few weeks and not known that it was there. So I apologize for that. It's really odd that it's not listed as that since it's 100% seller. It's not like Kingpin Cards has many more sales than them. So I don't know why this is happening on this UI. But it is a data point. I wanted to capture it. I think it's important to capture that there is a for sale box at that price. You can buy it this moment. So I marked it down. It may have been there for a while though. And that unfortunately skews some of the data on WTR first edition box. But point is, you can buy it on TCG Player for $25.95. So down 13.68%. That's a $300 discount over what we've been saying it has been. I, again, don't know how long that's been sitting there. There aren't a lot of sales. You can see there's no market data, so there's no sales in this product, so it could have been there for a while. I just don't know. I'm very curious why it's not listed up here. I don't understand why that's happening. I've seen that before with, like, low rating shops and stuff like that. Like, they underprice it, but they're also not very good reputation. Maybe it's under 1,000 sales. Maybe that's it. Just they're under 1,000 sales, so they're not repped at the top. I don't know. Yeah, if you know, let me know in the comments. But sorry if my data is screwed up. But either way, we're recording it now. I'll try to keep an eye on that. I am not scrolling down for every box. Going through these and clicking on everyone to make sure there's no shipping shenanigans is already a little bit too time intensive. If you ask me, but honestly, there's so many times where the front page price and the tiles is just off, so I have to click through just to check. Anyways, Uprising is down $8, 11.59%. This is there's only first edition boxes, down to 69 from 77. Nothing crazy here. We saw it spike. We talked about it bouncing against this roof. We figured it'd come back down. Again, good sign on an upward movement. Because if you look, we bounced to a new high, we came back down a little bit. We bounced to a new high, we came back down to the same floor. You see that? So we went higher, and then the floor is maintaining and actually increasing if you go further back to 61 floor, 69, 69. That's actually a very positive motion. That's an upward motion for this price at this point. Now, which way does it break? Does it crack down? Does it crack up? I think macro will play into it. I think anything else, meta shifts will play into it. So let's just see where that ends up. Maybe this is all speculation going into heavy hitters, that there's some cards in here that will help counter what's happening in heavy hitters. I don't know why this is happening. I just know that price activity acts a certain way, and when the floor rises and the ceiling rises over time and it's bouncing between some spots or in a channel, typically that's a good sign for the upward motion. Not always, so we'll see where this lands. Dusk Till Dawn down 8.11% to 74 from 80. No big deal. I mean, it was at 70 a month ago, 74 a month and a half ago. honestly, again, even though it's down 8%, it's still an upward motion in general, with 80 being the top. I do see this as a squeeze. The bottom is squeezing up towards an 80 flatline top, and what that looks like is they call that a bear flag, I think, rising flag, something like that. I'm not a technical analysis person. I know a little bit about it, but that's not really my jam. So I think that's what that's called, though, and that does tend to break down, if I'm correct on which flag it is. But yeah, feel free to correct me. Like I said, I'm not a TA guy, so I do what I can. Let's move on to Monarch, down 7.5% to 320 from 344. This is a down. We had it up at 344 for about a month. It was 329 previously. This is just a downward trend on Monarch first edition cases. Probably coming off the highs of Dusk Till Dawn. It's the only thing I can think of. Moving on, Evo, the one bright spot in the data this week, is up 11.46% to 253 from 224. Really nothing here. This was just that weird 224 blip in the market. We said it would probably correct. It sure did. It came back $1 below where it was before. So really probably ignore all of that. So ultimately, the real lesson here is that there's not a whole lot happening that's worthy of mention. There is some price activity that has happened, but it mostly looks like anomalous data, anomalous price moves, noise in the market, and following a trend that's been in place for a bit. So nothing really surprising, but it does look bad when you look here and it's just all blue and nothing else. So that's sad. So anyways, let me know what you think in the markets. One last thing. Heavy hitters has not been included in the charts yet. I will get there now that it is released. I have to do some stuff to make that all work, and I didn't have time today. Quick update. We talked a little bit about the economic situation last week. The Fed did end up coming out in their meeting after I put the video out and saying they were holding where they are for now. It scared some markets. A lot of stuff declined in the S&Ps and whatnot. But I think it rallied back like the next day. So not a big impact on things. I imagine this is indicative of the things I've been saying, that while the employment is starting to look tighter, look a little harsher, it has not hit the economy yet. We had a couple of positive news items for the macro, GDP, etc. There's higher growth than expected. So it's basically not time to cut yet. You should cut when there's actually a decline, when there's actually trouble. To try to hit a soft landing, you should wait until there is signs of trouble, but not wait too long. That's the trick. That's the part that never happens, that basically in the history of the Fed has never really worked. They're getting better at it each time, but they're never perfect. It's very difficult to predict the timing on that stuff. So what it boils down to is we're seeing basically tightening labor market. It's going to get rougher over the next 6 months. I'm seeing it in my personal work too. Every company that I deal with is essentially tightening up, letting go of people where they can. Basically trying to extend their runway. These are all VC-backed companies, so the dynamics are different than public markets, but basically tightening up their expenditures and their burn rate, essentially, to lengthen their runway. They want to be able to last as long as they can on the funds they have, because the markets are not friendly to fundraising right now because of interest rates being high. And this sort of activity extends the time they're going to have to do that, right? Like if you were a startup VC backed, you were hoping that rate cuts were coming soon, because rate cuts will push money more into things that are riskier investments. But because the high interest rates are holding for a while, there's less incentive to get into these riskier assets, including startups. And so there's just less money available, and that means startups need to make do with what they have longer. And that's what we're seeing happen across the board in my portfolio companies. It's pretty interesting stuff, but yeah. Let's see, what else we got here? Not too much, I guess, on the economic side. The Fed and that whole thing will just happen as it happens. I guess we can look at some charts. Let's see. I don't know what's going to be worth actually looking at, because let's just go uprising. Why not? See what that shows. Oh, we're already there. Make sure this is... Am I seeing this right? Oops. Uprising was... Yeah. So it's holding at this floor with an upward. Well, this is terrible. This does not show what I was seeing through the data itself, but I mean, it is. It's just really rough because of the scaling. So, anyways, I guess the bottom is this 69. We went up and flatlined on the bottom, and then we're going up kind of at an increasing rate at the top. Generally speaking, we're seeing a parallel between here and here moving that direction. We'll see what happens next week. It'll probably break out of this pattern. Honestly, I don't see it going up at that rate of change. Let's look at Dust Till Dawn is going to be boring. All this is actually boring. There's not much to actually look at. I guess we'll just go WTR just for giggles here because we haven't seen anything. Yeah, look, it did the thing. It doesn't look like anything. Boy, charts are boring when the data is boring. All right. Well, I guess that's it for this week. Let me know in the comments if you have any questions you want me to dig into anything economically. I'm happy to answer questions if you have questions about particular economic triggers or maybe a headline you saw, something like that, and you're not sure like implications, how that plays out. Happy to discuss what I can. I mean, I'm not an expert in everything, obviously. But, yep, that's about it for this week. I hope you guys are out there cracking packs, playing games, and enjoying this hobby that we love. Until next time, have a good one.